So we went to self-destruct mode for a second. So, Michael, are you there?
Okay, yeah.
You were talking down here at the bonds.
Yeah. So and then gold, that's the next one, and real estate is the last one.
Okay.
And you see, for instance, that real estate are now very related to the S&P. And a decade before, it was just the other way around. And also, if you take a look now at the day-to-day market, I mean, I remember we have had so many days where basically everything went up or everything went down, and so the whole classical asset management approach gets more and more questionable.
Yeah.
And I really think that if you optimize this, or if you are smart and you don't need to be super smart, but if you're just a little bit smarter than the average in managing the S&P 500, it may be the better strategy than playing along with too many asset classes.
Okay, gotcha.
And great sites, it's not ideal that you can't see the link, so I will provide the links for the next time.
Okay.
So really three nice sites where you can enter different ETFs, or I think also different stocks, and then you see how much they relate to each other.
Okay. Let me do a real quick. Yeah. So if you can provide me these links, I'll forward those on to everybody. Hey, just real quick for those of you who didn't get blown out by the reset. One, you should be able to see this screen here, the mind correlation. Welcome to reality, new reality. And can you hear us?
The broadcast is now starting. All attendees are in listen-only mode.
Okay. That should have put everything back to normal. And you can catch. Okay, great.
Do we have only 7 attendants now?
Yeah, unfortunately, it dropped the load. Yeah, and if you guys couldn't hear what happened, apparently GoToWebinar went offline, and that's what took everything down with it. I don't think it was the work that I've had done on my wireless router here, but Mike concluded up. Fortunately, the recording for the Chinese hack. Fortunately, the recording for the first part did take, and so that's been converted. It'll just take a little bit longer to get it converted over into a new presentation. So let's take a look at the charts real quick, and hopefully they are up. Okay, good. So yeah, Chinese hack. That was it. Here's what Mike Traeger was talking about a little bit earlier today. Is that last week when we were talking about the markets, they basically 3 of the 4 indices were positive, with the S&P and the Dow being slightly positive, the Russell being negative. And now with the sell-off that's been going on over the last couple of days, the NASDAQ is starting to return some of its profit, and also the Dow back to negative, S&P back to negative, and the Russell definitely negative. Let's take a real quick look at the individual charts. I put on this is the S&P, and what I did was took the low here, high here, put the Fibonacci retracement on that particular thing. As you can see, with today's action, daily chart on the left, weekly on the right, we have just about reached what would be the 38.2 or 1/3 retracement of this particular move. So we're going to reaction move back down. What it appeared to be a very uniform drop. And we talked about this on Wednesday night. As we can see, has accelerated the last 2 days, and we've seen that same acceleration in several of the stocks we've been trading. The NASDAQ. And just real quick before we get to the NASDAQ, check out over here the True Strength Index has, in fact, we came up, hit, didn't make a new high or get totally back up to the old high, but had negative divergence going here, negative divergence going here, and now it appears as if it is turning over for a potential retest down lower. Keep an eye on that 38.2% retracement, because that may will be a indicator of if it drops that level, then we're probably going to be retracing all the way back down to the 60% or the 2/3 level. Same thing, accelerating to the downside the last 2 days on the NASDAQ, the sell-off. And we don't necessarily have to know why this is happening, but we do have to recognize that this is acceleration. This is showing some of that internal weakness that we were speaking of a little bit earlier in the session. Then the Russell. The Russell had been showing that it appeared as if it wanted to really come finally breaking out, getting into gear with the rest of the market. And then, let me get rid of this fib. And so then it too ran into this past resistance or past support, which had now reversed role, was resistance up at the 1198, 1200 point level, and then it's reversed and accelerated itself over the last couple of days. Now it is coming into a past support level here at the 1140 level. And so we'll see if we get a nice little bounce up and then a drop, or it could stage a reversal here and drive higher. And we'll just have to see what's going on with that. On the weekly chart, take a look at the weekly chart. If we close where we are today, this is basically a bearish engulfing of last week's price action plus much of the past, previous weeks there. That is definitely a negative sign for the index, which tells us that potentially it increases the probability that we are going to be a retracement back down here to the 1080 level. And we have slipped below all the moving averages again. So we are below the 8 and appears to be falling. Well, let's see if we get one of these moves. And we like these kind of moves. We've made a new high. And so if we come in here and set right here, let's see if we bounce up to a lower high and then a rollover. And once we break that 1140 level, that sets us up for past support that goes in about here, just above 1100, and certainly down here at the 1080 level. And we're getting what we're kind of expecting, in that the small caps, with the threat of an interest rate increase, the small caps are in fact rolling over. Even Michael, even with the now I haven't looked at the DAX here lately, or the European market, but are you getting similar type of action on the European stock exchange?
Absolutely.
Okay.
Absolutely.
Okay.
I think it was a little bit time related. It was a little bit with negative time shift.
Okay.
So you see the trend comes from the US.
So what's the path of least resistance? It's really a toss-up. I mean, I'm not going to go fully bearish, but as we talked a little bit earlier, with such a negative breath, the underlying, under the hood energy and power within the market, if those 8 leaders start to fall apart, we could see an acceleration down to the downside. So this weekend, take a good look at the charts on those 8 stocks we had been talking about. And I think we had this slide up a couple of weeks ago, couple of months ago, when the market started to go into this correction. And so the wild ride looks like it may be back. So with the active trend trading system, we try to practice the 5 pillars of active trend trading, in that we focus on what to trade, top quality IBD growth stocks and index ETFs, when to enter. We've had some really good enhancements and refinements going back to focusing on the 8-day moving average, which has helped performance over the last 3 months dramatically. When to exit, what strategy to use, and what to expect. So there's our basic system, and then we add to that 3 different strategies: stocks and index ETFs, basic options, and then wealth building income. Here's where we finished off this week as of about 9 o'clock this morning. And this is inclusive of both closed and open positions. I wanted to add to this week. Here's what has been on a month-to-month track. As you can see, the first almost 8 months of the year, it was a challenge with this particular market. We went back and did some refocus and said, we need to get back and start trading the 8-day moving average, which we started doing towards the end of August, and the returns September, October, November have jumped back up in the range of where they should be to hit that 40% per year mark. And it's one of the things that Mike pointed out on Wednesday night is that this spreadsheet is very indicative that of sometimes a system, when a system is being challenged, but you know that the back testing, you know that it's been proven in years past, stick with your system, and eventually the numbers start coming into your favor. And also points out that trading stocks is much like a job where you get paid a commission, if you will, and some months are really, really good, and then some months they can go against you. But it's a lot like that. And so we strive for consistency, but you're still going to have your fluctuations, ups and downs. Right now, what was really interesting, what was very nice about what the active trend trading system did for us is it actually worked us out of the market, so that now we are have a mostly in cash as the market has gone into its correction. Have 1 open position in the YY trade, which is turning into a pre-earnings trade. Our wealth, income, and generation strategy number 3, we've had a weekly cash flow of a net of $388, no strategy, 2 trades, and now we're waiting for the early warning alerts to put up a new signal. And again, the early warning alert video will be up later today. Here's an example of I don't know if anybody have continued to follow Juno since we got in and got our reward for trading it, but Juno has continued to fall a little bit. It's settling in here about $50 after earnings, and continues to just kind of hang out here. And we'll see what it does with the correcting market. Here's an example of the weekly option trade. This is wealth and income. This is on a IWM call that we bought back in April 29th, bought the January 16th 124 call for $7.33. And as you can see, every week we've added to this a little bit of premium, until now the individual underlying entity is totally paid for, and we're sitting with a a total profit of, we paid for the underlying, and we're sitting at about 46%, and this is better than that now because we've added a couple of more weeks to it. So going in 2016, we're going to be focusing on training sessions for small groups, no more than 10 people. More details to come on that. Early warning alert update will be posted to the website and the YouTube channel sometime today. And if you are a member of the Active Trend Trading system and or the early warning alerts. We will have a price increase going in January. However, if you are already a member and maintain your membership, your rates are locked in. They never do go up. And so if you're listening to this video and or listening to the live show, I do offer a discount of 40% on the active trend trading membership, and it's in excess of 50% on the early warning alerts. That's for trading the index ETFs. So if you're attending the How to Make Money Trading Stock Show, we invite you to come and join us and lock in these savings. So with that, that's all we got. I apologize so much for the technical difficulty. Reminds me of the days of when they used to do live TV. For those of you who remember those days when things would drop and you'd have to pull it back together as quickly as possible. So see you next weekend. Have a great weekend. Trade wisely, trade properly. I will be taking a look at a couple of stocks that you want us to look at. Michael, you got anything else today, bud?
Not really. What we can look, just that I call this out. GoPro has crashing again, and at least in my broker account, it flashed that it's not allowed to short the stock anymore.
Oh.
Suspended from trading.
Okay, well,
trading.
If they stop,
and Nike crashed also quite a lot today.
So GoPro is complete. Let's see what AMBA did, because AMBA is a cousin of GoPro, the same business, and it's actually holding up pretty well. It has earnings coming up here towards the first part of December, so AMBA actually has held up fairly well. At a level of support. And then what'd you say, Nike, NKE?
Yeah, NKE, yeah.
Yeah, and now that's pulling back to a, here, these are always hard to judge, is that basically we had a breakout, nice little breakout from a little bit of a quasi cup and handle or quasi cup position here, broke out at the 118 level, and now it ran up, made a really nice run up of what looks to be about $12 to $15, and now we're getting a sell-off, and the sell-off is happening in accelerating volume. So this is going to do either one or two things. It's going to come here and find support from at the breakout area. And then we watch what happens when it pulls back up to the 8-day. If it fails there, that's telling us that we have a short candidate ready to rock and roll. So what does anybody else have? Let's see how YY is doing. Yeah, it's hanging in there, trying to keep above the 8-day moving average. Again, we've got earnings coming up on the 23rd, and so I'll be watching this trend line that's been drawn in here if you're trading this along with us, and if it starts to break down or close below that, that's where I'd be saying, okay, I'm moving my stop loss up from the 4% that was originally put in as a stop loss when we launched the trade, SBUX. So is anybody following the big discussion about Starbucks and their red cups? It's kind of interesting. Starbucks pulling back to the 50-day. Yes, it is. What's the volume doing? And we always go down here and check the volume on this, Sandra. And right now it's a low volume pullback. And in reality, kind of hanging okay. If we go back and look at this as one of our, if we call this one of the breakout areas from this high over here, we broke out, came back, retested, and went again. And so it may be approaching that, but it is approaching an area where a small nibble, if you're not in the stock already, would be potentially fine, because if it moves down below this 59.32 level, you're going to be gone. I would hope that's the way you would trade this. So any more stocks for today, guys? David, so am I. And without a doubt, there was a lot of hand wringing and gnashing of teeth. And
I have one market I think it's interesting to watch now is on the one side a gold producer. You could take GG for instance.
Is
That's the
GG coming
ticker.
back? Well,
Or ADM, that's agriculture. That was really
yeah,
slashed.
yeah, GG. I mean,
Or
it is.
Monsanto. No, I think Monsanto does better.
Yeah, GG looks definitely like it is falling. It's got good volume, but this is a gold producer. It looks like it. I won't say it's looking for a bottom, but definitely this consolidation pattern. Will it break back up through and move higher, or will it move back up and then drop? But the thing to remember on something like this is, like, if we have let's say we have a trigger to get us in at, say, $12.39. Well, even if it moves up, even to 14, you're looking at a 13% gain. And Monsanto?
I think Monsanto, that was the clear leader. The other was ADM. It's the second biggest.
Yeah. Archer Daniel. I think that's what it is. Oh,
That's
here's a weekly chart. Big sell-off, and that was earnings related. And so, okay. NVR. And so, hey, David, thank you very much for your comment, because I agree with that wholeheartedly. There are bigger fish to fry and more places to focus on. NVR looks kind of interesting, Michael, in that it's just, what is NVR?
never heard of.
NVR Inc. It's, Barry, what does NVR do? Anyway, it has been on a, real estate. It is it doesn't trade a lot. So NVR would not be a stock that I'd be looking at even spending much time with. I mean, you're talking about 33,000 shares on a, for your high, for your average. In order for a stock to make it onto my, even to be considered to go on the watch list, it's got to be trading at least 500,000 shares per day. And then I would go back and take a look at this from a stock checkup on the IBD checklist to see what kind of what its fundamentals look like. No, I wouldn't. Barry asked, wouldn't you look at the dollar volume, it's being such a high price stock? And like I said, it just doesn't fit the profile of the stocks I'm looking to trade. Being a growth stock. Again, I would take a look at the IBD stock checkup, to see how that categorized it from a fundamental standpoint. But yeah, like I said, it does not, it does not fit the profile that what I'm looking at. So let's see what we've got else here. We've got Ulta. And okay, a lot of stocks are showing this type of characteristic. Here we are on a daily chart here. Now this is non-earnings related unless somebody knows something that's coming up on earnings, or sometimes they pre-report if they're really expecting something negative to happen on earnings, and that may, but Ulta has been on the IBD 50 list several times this year, maybe on it right now. This is not the kind of reaction you expect from a stock on the IBD 50 list. If you were in this stock, hopefully you had your stop losses in place. PayPal, I'm assuming that's PayPal. Okay. Yeah, PayPal was spun off by, who were they spun off by? They were spun off by the auction website. eBay, thank you. Gotten to that point in life where sometimes the old short-term memory. I kind of like this. You had a good move up, and now you're coming back to test this breakout area, but it's got to basically bounce from this point heading back up. It could also be basically saying, hey, I've had my fun, I've made my high, because much of this gain here from here to here was done on, as you can see, below average volume. And so we had the spin-off, but it would be, I would run the stock checkup on it to see what kind of fundamentals it was looking, how strong of a growth stock it might be, and then utilize it from there. So, okay, another one that failed today is VIPS. VIPS had been looking really positive, but it too has taken on that kind of classic look of, and again, as we look down here, volume okay, but not really showing significant buying volume. And then as soon as earlier this week, we get this break of that trend line. And as soon as that trend line breaks, that would have been a time to be out. If somebody was trading this saying, hey, as long as we keep above the 8-day, well, that's why on the bounces off the 8, I try to keep my stop losses at 4% if I'm initiating a position. Because it kind of makes sense, because on breakout trades, IBD uses a 7 to 8% stop loss. Well, if you're buying closer to a pivot point or to on a bounce off of moving average, having a smaller stop loss is basically, it'll put you at about the same dollar amount if you would have done a breakout and taken a larger percentage stop loss. So, okay, guys, with that, I apologize for the technical difficulty, but we will get this this recording tape back together and have a great weekend. God bless everybody. Thanks, Michael.
Thank you. Bye.
Okay, bye-bye.